Good evening. This is Ken Long at Tortoise Capital. In a minute, we're going to listen to Dan from the chat room discuss his 3M intraday trade. Some things I'd like you to listen for is the tone of quiet confidence he has in having mastered the language of these concepts and how he's adapted them to fit his own needs, his own personality, and his style. And it's consistent throughout the video. You can clearly hear that he's in charge. He's driving this train. So 3M was a symbol that we marked up at the advanced swing course independently of Dan's work. And we identified it as being in a critical state for a lot of reasons and examined how we might trade this both intraday and as a swing trade. And I'm going to go through that as a at the end of Dan's. Now let's do it right now. I'm going to go through that trade frame now and then show you the swing context, and then we'll listen to Dan's work in a minute. So here's a quick look at the trade frame in 3M on daily charts. This is about the last 30 days or so. And so what am I seeing? All right, so the RL270, the long-term fair value, is way high and sloping downwards as a result of the sell-off and a big gap down. Slope of the river is down. We have the 10 has crossed over 30 and left the river. The 30 has left the river, so we have a downward trend. You can see the dragon and the baby dragon are both on the edge of the river, the baby dragon leaving. The big gap down has terminated in a tightly compressed doji, and from the 10-day high to the price, we have a 10% sell-off. So this is firing on all our cylinders as a max pain range compression. By the way, this all started off earlier as a super pinch, about 10 days earlier, and so the excursion from that super pinch is what has kept this one on the radar for us. Notice the PSAR has rolled over and is right at the edge of the river. And so we set this up as the red zone, yellow zone, and green zone. I've removed those so you can see this a little easier. Set up our mechanical frame 5 cents above, 5 cents below yesterday's range. That was the range risk. Said the upside targets, if this opened in an orderly fashion and crossed through the green line, we'd buy it mechanically here on the swing with a execution stop 5 cents below. That would be a stop and reverse because of all this collapsing price action, that this would be a no-brainer to go short. But the upside, the path of greater surprise, we had a first profit target here at the edge of the river and the PSAR and penetrating the baby dragon, and even that would be a 2-to-1 execution risk, reward to risk. Then Bollinger Band mean the far side of the river and ultimately back to long-term fair value. So this is in a critical state. It was the single best mprc, max pain range compression. It was a 5-day down, so we really like this one. So that's the context for Dan's intraday trade. You will notice that it opens and then shows initial strength. Now throughout the day, 3M, although it was the worst performer in the Dow, actually had relative strength compared to the rest of the Dow. So there was actually buying strength in 3M. Now you'll hear Dan talk about the rest of the indices not performing well, which caused him to shorten his expectations, and so he was able to have a winning day in 3M, even though the market and 3M itself was down. He was able to harvest some gains intraday. Now we're still interested in 3M for the swing trade longer term because of that show of buying strength in the face of broad market weakness. So that's going to be a continuing relationship here with 3M for as long as this RL10, the trader's price, is so divergent from the long-term fair value. There's a long-term value baked into the cake here, and we'll continue our swing interest. So let's get on to listen to Dan's about 4-minute discussion of his intraday trade in 3M. I really appreciate him contributing, showing us the way. Stand by.
It's been down for over 5 days in a row. Hey guys. Hey guys, this is Daniel from the chat room, and I'm just going to do a quick lecture on my 3M chart markup for today. So basically, the morning before I did my prep work where I was just looking at my targets that I wanted to trade, 3M really stood out to me as it's been down for over 5 days in a row. This is a very critical state. It could still go down further, but we could always get a good pop to the upside when it's been down for this many days in a row. So the opening bell opened up and the stock gapped up. It was up about 0.7% to about a percent. And it wasn't a major move, but it was something. It was still stronger than the rest of the market. And when I looked at the charts of the last several days, it was price was still holding better than it had in the past. So I was interested in potentially buying when I got a signal. I do best when I'm patient and then I enter my trade. So I just wanted to wait for a pullback and then enter accordingly. So right here at the RL 270 and 90 MA, we had one of those setups that I like to trade. I could have easily bounced off this price area right here. So I went long. That one didn't work out. Happens sometimes. So then I reversed and went short. This is a pretty easy reverse for me. I just feel like such a critical state like that, it's not going to stay there. So I felt comfortable taking that short. Probably exited a bit too soon. I just wanted to get paid and make up for that last trade. Um, Probably should have waited until one of these green bars right here and then exited. So then after that, I was looking to get long again around 10:30. I was getting interested, but I wanted to wait. So I waited. Then we get the price off the Bollinger Band mean, bounces off just like it's supposed to, higher low, and then it continues up. And to me, right here is like double bottom formation, higher low. That's very low risk to me. Like right here off the close, stronger intraday candidate. Uh, to me, that's a low risk trade. So I went long. I probably could have had a little bit better entry, about 15 cents. Instead, I had like about top of the bar where I should be right above the skin of the dragon. I held it for about 9 minutes and I got out. I liked how the stock was acting, but I did not like how the index was acting today in the morning. And dead to me. And whenever I'm in a trade, I want the stock to be acting correctly for my position and the index as well. So I got out quickly just for a small gain. Then I was just checking my other candidates in this area. And when I came back, honestly, I was just kind of mentally preparing for 3M to fail a bit, but it was holding into like this consolidation, and it was all pressing up into the VWAP, RL 270, 90 MA, and I thought this was favorable if it wanted to potentially give a leg to the upside. So I got long again. It had a little push, but then it started going back down again, and I really didn't want to give up too much. Right again, the index during this period just wasn't acting nicely. The index pulled back, went to the VWAP, pulled back again, which is normal, but then it was just stiff and dead. So I was like, forget it, I'm done with my longs. And at that point, I just kind of went into stalking mode. I just rather be out wishing I was in than the other way around. So that's my lecture for 3M. I hope it helped. I'll see you guys in the chat room.
All right, so this is back to Ken. Just a couple other things to, as we're looking at the film, looking at the tape, some other things to consider. The gap up in that oversold candidate, if you were a specialist in 3M, you might have played a hybrid frog entry here on a gap up and going. It was the strongest member of the Dow at that time, so there's potential for a trade here, guided by the PSAR. This PSAR flip is kind of crucial, especially in the morning. You see the markets rolling over. By this time, the S&P was already negative, even though 3M was already positive. You get also a confirmation that this move may be done when the MACD histogram, which is above the zero line, signal crosses over its EMA and then enters the MACD river. Then that's sort of a warning that this is over. Now, because 3M is so weak and the markets were vulnerable and failing across the board, there's an owl pattern here that I'd like you to just be mindful of. And if that one doesn't work, then the pocket short here into this downward move, and so that's almost a percent move. And the PSAR has been a very strong and powerful guide here, pretty tight stops. Just using the PSAR as a guide. And I want you to notice throughout this the effect of the MACD histogram 10, 30 with a 5 period EMA. Now, beautiful pocket entry on the strongest stock at a moment when the indices were starting to recover. Notice that when this goes below the zero line, you can afford to have a short orientation. Dan's patience now aligns with a pocket entry to the upside when you have this RLCO pattern in the MACD outside its river, and then we're looking for that move here. Now, this is front running the actual long side bias. So what we're looking for to get an early entry here is that we're looking to see what happens when it gets to the zero line. If it breaks through like it did over here, same pattern where Dan re-entered, beautiful, then this long run above the zero line is when you can have that long bias. Notice the nice grinding upward move that may help you stay a little bit longer. But I don't dislike this exit because the rest of the market really was starting to tank. So that's a good preservation of gains in the face of market and sector weakness. So what I want to point out here is that, yeah, you could adopt a downside bias here. You front run here and it doesn't cross the zero line. That's what makes that such a beautiful exit to preserve capital. And then the stop and reverse is excellent because we had a crossover to the downside underneath the zero line in the weakest stock in the Dow while the rest of the market is tanking. I don't mind this getting paid. Money management during the day is kind of the key to sanity. And even if you stayed longer and you let some of this get you out, depending on slippage, that's still a pretty good exit. The PSAR flip alerts you to the potential to the long side now. The the P1 down here in the MACD shows you that this is potential. So this is that same front running move back towards the zero line. In this case, pays off. So if you had taken this as an entry, you're kind of the second mouse. But I also love the P4. So you have a low, a higher low, buying in the pocket in the middle of an improvement in the MACD histogram confirmed by the crossing of the zero line. This MACD histogram, although it looks pretty thin, as long as we're above the zero line, there's an upward bias in here, so there's some potential. When that crosses back to the zero line here, that run is done, and then I want you to notice rest of the market was weak. This was still a weak stock. You had some markets money available here. This is a potential. There was some follow through here for the rest of the day. It got weaker the rest of the day. So very well played by Daniel, consistent with his trading plan, true to his psychology and style. He made bank on a day when the market was down and the weakest stock was down, and yet he made money on the long side by picking his shots and managing his risk and taking an informed view of the market to help him guide his decision making in the targets. Absolutely well played, well done, and thank you so much for sharing with us and letting us learn along with your work. So, Ken at Tortoise Capital, giving thanks to Dan and his generosity for sharing. Keep your risk measured and powdered dry, and we'll see you in the chat room.